Hello, hello, hello. Hello, guys, and welcome to the 39th edition of the Trading Opportunities webinar. This is Nirav, and before we begin, I'll just wait a few seconds so that people who are going to join in come into the stream. If you can, by the way, see my screen and have joined the chat, do let me know by typing in clear or that you can see basically, or hi, something like that. At my end, I have checked and it looks like the stream is going in fine. And let me check the audio again as well at my end. Okay, thank you there, whatever that is. So thank you for the clarification there. I would request that if you can join in from a ID whose name I can pronounce while keeping some seriousness, that would be appreciated. But thanks anyways. Also, it looks like I am still not able to see how many people are online. Probably because I've joined in the stream monitoring from desktop. I'll just get everything set up. Give me a few more seconds, guys. Hmm. All right. Looks like everything is all set. No point in delaying any further. So with that, let's just get started. Also, I believe there is some problem with the chat because I do not seem to be seeing much participation here on YouTube, which is generally the place where the audience comes in. So I'd like to just quickly refresh the browser and see. Okay, so let's now begin with our 39th edition of the Trading Opportunities webinar. And we'll just start off with the quick disclaimer followed by the introduction and then the actual charts discussion. So here's this disclaimer on screen suggesting all content presented is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading or investing, then you yourselves will be liable for your profit, loss, or loss of profit. With the legalities out of the way, let's head over to a very quick introduction. So as you guys know, my name is Nirav. I'm the admin and owner of the YouTube channel 50 Eyes Market Analysis, which is the place where this 39th webinar is being broadcasted. So this webinar is called Trading Opportunities webinar because that's what we do. We look at the opportunities in various different markets during live market hours, of course, right? And we conduct 3 of these per week. That is Monday, Wednesday, and Friday. Our timings are always 2 p.m. GMT. So that's the way we have been doing it. And this is the 39th webinar. And before we proceed further, one important thing. We have so far caught 40 plus trading opportunities in these 37 webinars. So what we caught or did not caught in the 38 we will discuss in this webinar, but in 37 webinars we have discussed in live market conditions 40 plus trading opportunities which have worked out. And keep in mind, we are just talking about the big moves here. We are not talking about the small or tiny movements. If we include that, the number will go up much higher, right? Now, going further with the discussion, this is the Twitter handle I use, 50 underscore EYES, where if there is any particular announcement, like if there is a particular reason I may not be able to do the webinar or something, I can make the announcements here, as well as the links for all the webinars also go up here. And lastly, for the introduction part, here is my 6 years plus consecutive 80% plus accuracy track record. I always like to show it off before we proceed, because in this industry, even a 60% record is considered high, and I have 80% plus accuracy for 6 plus years. And you can check, of course, everything is listed here in very transparent manner. You can check these Excel sheets or Google spreadsheets, sorry, for that matter, anytime. 2021 accuracy was 82.22%. 2022 it was 88.52%. Going further down, 2019 was 84.88%. And 2018 84.61, 2017 87.5. Again, you can just scroll through these, check the instrument name, the date of discussion, the analysis done, and the actual video link over here, and what happened of the analysis. Same goes for 2017. As I said, it's 7.5, and 2016 83.34. With that out of the way, I would say that the about us part is over. This is of course done for the new people who might be joining the webinar. Of course, the regular audience has also got to bear through it. Hello, Clever. I hope you're doing well. Hello, Philippe. Good morning to you. And let's now get ahead with the actual webinar's proceedings. One final thing before we do that, the way we will proceed is that first of all, we'll go over the chart of Euro USD, followed by EURCAD, USDJPY, EURJPY, crude oil, followed by gold, SPX, Nifty, and then at the end, Bitcoin. So that's the way we will proceed. And on screen, you can see the chart of Euro USD, Clever, and Philippe Calfron. If you can confirm one final time before we actually begin, that will be nice. If the about the audio as well as the visual, right? So Euro USD, we discussed last time that we should be seeing some further downside movement here on this counter, and the downside movement was of the A down, B up, and C down nature is what we were thinking. Thank you, Clever, and thank you, Philippe. So as I was saying, we were expecting that the downward movement will be of the A down, B up, and C down, right? And actually, we were able to predict that somewhere over here. You can check one of the past webinars, and since then our bias has been either the market can proceed sideways or it will just go down. So based on this analysis, I personally was able to take some short trades here. I exited some over here, then re-entered, and then exited some over here. Those were intraday trades, so I was able to capture even the small moves. And I had one trade which was done, I think, initiated, I believe, yesterday. So in that, I was able to capture a little bit bigger part of the movement as well. So long story short, multiple trades on Euro USD I have been able to take. And yes, if you guys are following me, and if you were also able to capture any part of this moment, please do let us know by typing it in the comment section, so that new viewers can see how everybody is benefiting here. Hello, RJ on TradingView. So getting back to our discussion, we have been able to capture the C leg down, right? And now what's the story is what we are interested in. So see, generally what we like to do is in these kind of situations, we like to see a break of this channel, right? Only once we see the price breaking above this channel will we be interested in any kind of longs on this counter. And as far as I'm concerned, I personally think that it is possible that this market is still going lower, right? Because as you can see, we already have our target around 1.05656, right? So since the target is not achieved, it is still possible that this market has more downside remaining, right? Again, it's not a rule. So the way we will proceed, as I said, for the upside, we break for the channel, and the downside, it is possible that we might see some price action form here, which may give us some possible setups like a three-wave correction like this, and then we can wait for the break of the trend line. Something like that is possible, but the actual confirmation is obviously the break of the last low. If the market really does go lower than this last low, which you can check on your own respective charts, but it is at my end coming around 1.06124 roughly speaking, then it will be a possible sell setup, right? So that's our way of trading this counter, right? So based on that, what I'll do is I'll adjust my downside alert, and of course I'll place an alert on the channel. Let me know, guys, if you have any particular question regarding this particular chart. If not, please do type in comments or understood in the clear clear in the comment section, so that we can move ahead with our next chart of EURCAD, where we already have a running trade, by the way. And yes, one thing, with this particular trade performing in our direction, our tally has now gone up to 41 in the last 38 webinars. Probably I should use a counter somewhere here on screen, so that everybody can view it all the time in the webinar. Thank you, Clever and Philippe Calphone, for the confirmation. Now let's head over to next chart. Okay, so EURCAD, nothing really has changed, and it isn't really performing that well. So the analysis and the trade have been like this: that in the last or last to last webinar, I entered longs based on the analysis that from this point of reference, which is around 1.45928, we have a wave A down, B up, a C down, right? Because the C looks complete, I entered longs, right, with the stop loss technically placed around the low, around 1.425, roughly speaking, right? So with that in mind, our view is that this market will go something like this, or at least go up a little bit, right? Even if it's forming something complex, it should at least go higher than this alert line of 1.44388. Based on this view, I have added longs, and so far, as I just mentioned, they have not really given us much of anything. So it's just a wait and watch scenario here. It's not like I can do anything about this. If it doesn't work out, either I will exit near the lows, or I will let it hit the stop loss. Basically, I'll probably just trail the stop loss, right? So wait and watch on EURCAD. I don't seem to have anything to add here. If you guys have any specific doubt, do let me know. Otherwise, we move to USD JPY. So USD JPY seems to be having a lot of bullishness, right? So currently, I'm not considering long possibilities, right? And the reason for that is that the bearish outlook is still valid. It is still possible that the market has still one leg down remaining, right? Thank you, Philippe Calvon, for the confirmation. And thank you, Clever, for the confirmation. So what I'm saying is that on this counter, even though I think it is most likely going up, I have not added any longs because the bearish possibility is not completely relegated. So what's the plan here? The plan is simply to wait for this level to be taken out to the upside, 137.495. So for now, we wait for the break of this level to the upside, right? Later on, it is possible that more price action gives us a little bit more of a clear setup or create a clear Elliott wave count or something. And based on that, we might be able to enter before the break of that level. But as I said, right now I couldn't find any clear evidence for bulls. This leg particularly is looking more of a sideways correction, can be counted as WXY, and there are some other possibilities. But for now, it looks like it is better counted as a corrective structure up. So based on that, I am avoiding any longs for now. And also, secondly, as I said in the last webinar, that if this level is taken, then that's not good. Basically, what I meant to say was that if this level is taken, then it is possible that this market might still be having uh, this market might be forming a bullish bias. However, this one is not a confirmation. If the market goes higher than 134.75, this is not a confirmation that we are now in the bullish trend, right? So I have, I think, said too much, and basically we don't have any trade here. So I think it's best we leave it for Monday's discussion and see how it goes. Of course, if you have any particular questions in this regard, maybe it will be better I answer it, and that might also help other viewers if they have any doubts. So do let me know, Clever and Philippe and others who are live in the chat, if you have any particular doubts on the chart of USDJPY. If not, we will discuss our next chart, EURJPY, where I have pulled some trades. Some worked, some didn't. Do you need to turn bullish? See, right now it seems to be suggesting that this particular leg, let me remove everything, can be bullish or it can be bearish. It can be counted both ways. So the first thing we need to turn bullish is either we will need a clear count, right? So the count is currently not clear. Second thing, or one of these two things we need, by the way. Second thing is you can look for a clear level. That is an important price action level, which once broken, we can say with some conviction that yes, the winds have changed their direction or something like that. You get the point. So that level, in my personal opinion, is placed somewhere in this range. That's why I marked this level of 137.495, right? So somewhere near this range, if the market goes and sustains above it, then you can also say that yes, the direction may have changed. So because none of these things have happened, there is no real clear evidence for taking any action. Hopefully that clarifies your doubt, Philippe Calpon, and let's head over to our next chart now. Again, you can post if you have any further doubts. So next chart is, as we said, EURJPY, right? So EURJPY, we had this discussion earlier that we may see some resistance in the price zone of 142.911 to 144.199. Do they have a marking tool? Let's see. Why not use this? So yeah, take these levels as rough levels because I don't seem to be having the exact precision, or maybe I do have it. Let me check it. If I place it here, no. Okay. Anyways, so as I said, this is the resistance level. We have been able to figure it out somewhere here. And those of you who are joining in only this time, we were able to catch this leg, and parts of this leg as well, right? So these are the three main moves we have been able to catch on EURJPY. In the 41 moves we have caught total so far, right? So again, smaller moves I'm not even discussing here, only the major moves. So now what's the story here? The story here seems to be like that it is still within the resistance zone, right? So no need to change the analysis. We still need to wait for some sort of bearish sign here. Currently, we do not have any bearish sign here in my understanding of this market, right? And it looks like it may still be testing the higher levels of our resistance zone. right? Because if this count is correct, then this is possibly a diagonal. So this could be the first leg up, second leg down, and third leg up. So if the third leg goes too much higher than this resistance level, then we will have to start second questioning our analysis. But see, in my analysis or in my understanding, it is possible that this market goes and gives us a deeper correction rather than the pre-drawn resistance zone. The reason is that this market has a lot of resistances. It formed congestion over here, it formed congestion zone over here, lots of resistances it can reverse from. The one we have marked was based on Fibonacci retracement, and the market does not always care for Fibonacci retracements, right? We have to also consider the price. So given this price action, because it has formed lots of clusters or congestions, basically sideways movements, so I would not be very much surprised if this forms a little bit deeper correction. So long story short is intraday wise, I will be looking for some longs on this counter, because as I said, it may still be heading up for wave C like an impulse, right? So one second. So why I'm saying only intraday, the reason is that it is still considered counter trend, because overall we still are bearish, right? So that's why we will only be looking for intraday, or I'll be looking for intraday longs on this counter. Alternatively, or the second thing which is important is that if this market suddenly gives a strong downward movement, particularly taking out the level of 141.912, then I'll be interested in looking for selling opportunities on this counter. Okay, so basically we have discussed both the views, upside as well as downside. Let me know if there's any specific question on this chart. If not, please do type in understood or clear or something in the comment section. Clever, Philippe, and anyone else who is also joined in the live chat. Looks like today the people are not here. Generally, we have a lot more activity in the comments or chat. Thank you, Philippe, and thank you, Clever. So, one second here. Short term wise speaking, it does look like we have wave A may be here, wave B may be here, and maybe it's going for the wave C here. So I might take some intraday small long positions, kind of scalp. So even if they are big, the stop losses will be small. Above 143.517, maybe we'll see some good action, right? So that's why I have placed an alert there. So anywho's, that's our swing, as well as I just discussed the intraday setup. Let's head over to our next chart, CL or WTI's crude oil, West Texas Intermediate. So WTI is crude oil, right? So we have been a little bit unclear as to what it is doing in the past discussions. And the only clear idea I had was that if it takes out the alert to the upside of 81.027, then we will be interested in taking longs. However, this market has not done anything of that sort and it is going downside. So we need to look at our bigger picture analysis. From this point of reference, as I said, we had a wave X completing here, right? So if this market is heading lower and it takes out the low of 73.578, which I said in 2 or 3 webinars previously that if it's taken, then I'll be interested in shorts. So If it's really taken, then what is this market doing? So I think it might be forming something like this, and it does seem like this trend line is respected quite well actually, right? So I'll place another alert here as well because I do not want to miss the opportunity. It's better to be made aware of the possible trade way before it actually starts so that I can plan ahead. So long story short is that given the current bearishness, it is possible that it might have formed a triangle. It was a wave Y. Sorry about that. And this is expected to be a wave X, right? So what we expect is leg which would look something like this because we are heading for a wave Z down if the analysis is correct. And wave Zs are in three waves. They look like this. The first leg down is called an A, the next leg up is called a B, and the next leg down is called a C. So basically, that's our outlook for the bearish side. Bullish discussion we have already done too many times. If you want a clearer picture of it, I think we discussed in the 36th webinar or 37th. You can just check. We have discussed it in detail, the whole bigger picture and everything. So let me know, guys, if you have any specific doubts here. I have discussed from my end whatever points I believe are important. Thank you, Philippe, for the confirmation here. Okay, so let's head over to our chart of gold and see how it's doing. So in gold, we discussed, thank you, Clever, for the confirmation. So in gold, we discussed last time that this wave C or 3 might still be continuing. We were able to capture some shorts on this counter, right? Over here, I was able to capture some shorts, then over here as well. But yesterday, I did not trade it. I was busy with other trades, right? And also, I was looking for some sort of clarification. It has touched our 38.2 retracement level, which is basically the level of 1828.91. So it has done our bare minimum and achieved the target. So what's the next thing we expect? If this is an A down, B up, and C down complete, then we expect that this market takes out the red trend line, channel line, whatever you would like to call it. Right. Once this market goes above it, it can give us a small long trading opportunity. But do keep in mind, it is not a confirmation of anything at all. And why do I say that it's not a confirmation of anything? Is that this might still be heading lower and forming a nested formation, something like one down, two up, and a one of a lower degree, and a two of a lower degree, and then three of a lower degree. You get the idea. So if it's heading lower, then this channel won't mean much of anything. It will, of course, violate it, and we will get some short-term longs, right? But that's what it will be, short-term longs. So long story short, the way I will be playing this counter is I will like to take those short-term long opportunities. Of course, why not? But those will be intraday based, right? And on a bigger picture, if we see the market go corrective and then take this low again, last low basically, somewhere around 1818, and below 1818, I will be interested in taking some swing based shorts, right? So that's the way we'll play it. I think I've concluded it fast, but covered all the points. So if you have any specific questions, I would like to hear them. Probably they will clear out some doubts from other participants as well. If not, please do let me know by typing in understood or clear in the comment section. Philippe Clever, I'm still waiting on the comments. Oh, there it is. So thank you for the confirmation, Clever. And let's head over to our next chart, S&P's 500. So S&P is 500 last time when we discussed, we were expecting that this market can still continue higher, right? And the bias was that I was thinking that it was forming a impulse or a nested impulsive structure in the other direction, right? So far, it has not given us any upside movement or clear upside movement, or more or less, it has gone sideways within this box range. So it is possible that this market is still in the preparation phase of either going up, or secondly, it's possible that it is already starting the downward movement, right? So as such, I do not have a confirmation of anything, because firstly, it has not gone below this trend line, which we already have, this orange trend line, right? And secondly, it has not taken out the high specifically marked by the alert of 4174. So because we do not have any clarification from any of the angles, it is a wait and watch counter. My personal bias still remains that more upside can be seen on this counter, but as I said, I will personally like to see at least a move higher than the alert line, which is now at 4149.54. Basically, something near these last highs. If it goes there and tries to sustain there, then we will read the price action at that point in time and decide if we want to go long or not. So not much point pushing all time on this counter. Just a wait and watch with alerts placed near the highs and little below the lows. I'll head over to our last two charts, Nifty followed by Bitcoin. Of course, I'll wait for a few moments. If you guys have any doubts, please do let me know in the comment section, or do type in understood or clear before we move over to our next charts. Currently, by the way, from what we have seen, looks like EURJPY might be giving us some good trades in the coming time, and crude oil is also possibly gonna give us some good trades. So these two counters will be something we'll be looking out for. Thank you, Philip, for the confirmation. So let's head over to the next chart. Hey Jill, where have you been all this time? So Nifty 32. So in Nifty, we discussed, let me see. Yeah, so we discussed last time the level of, let me see, what was the level we discussed? It was not on this chart, perhaps on some other chart. So anyways, I remember what we discussed, so I'll just say it. There was the price level of 18,100, and in the webinar we did last time, I was saying either it was around 8,100 or 18,080 or whatever. I was saying that the market is very strong or very bullish, so we might see a gap up above it. So literally that's what happened. Market gapped up above that level, and we saw some good price action there. Jill is saying he overslept. Okay, most likely in the US time zone. So as I was saying, Nifty, we were saying that the market might gap up, and it literally did gap up above our marked level. And by the way, you can just check it in the last webinar, whichever that was. Actually, it was the 38th webinar, right? So you can just check it. I have given the commentary that the market, if it gaps above this level, it will go higher. And for the sake of keeping record, let me see if I can quickly pull that up in a few seconds. So give me a few seconds, guys. I'm just trying to see if I can pull out the webinar and show you where we discuss the price levels and what I was saying. And by the way, the tally of our trades that have, or the big moves that we have caught, now goes up to 42 with this Nifty trade. Let me see. 1080p. And of course, one thing I'll just quickly point out, if you are watching it later on as a recording, always watch it in the highest quality possible 1080p. Otherwise, these black screens might look really bad. Okay, so there it is, the last webinar. This is the mark level 18,070, and I was saying that the market is really bullish and it is expected to even gap higher than 18,070. Right, this is already marked, and you can check the commentary by actually visiting the webinar. And now this is the actual chart, and the market has gapped up, and it has gapped up around 18,096 something, right? So obviously higher than 18,070. So it literally performed as we expected and was able to even sustain it for a few minutes, right? Of course, in intraday session, I was able to catch something here, and then I have been just trading shorts. So that was a quick outlook of what we discussed in the last 38th webinar and what really happened later on. If you guys are interested in checking it out in your own time and checking the actual detailed count at that point in time, just go to my 50 as market analysis YouTube channel, hit the live button and check the 38th webinar for yourselves, right? So that's what I wanted to show off, guys. And let's head over back to our discussion. So what I think is happening right now, let me just quickly load up the bigger picture time frame chart. So see, generally speaking, a level as important as 18,200 once taken should suggest bullishness. As such, even yeah, 18,200 should suggest bullishness, and as such, even a movement near this level would be a sign that the bullish market movement might start sooner than later, right? However, the only thing that I'm finding a little bit out of the ordinary is that the movement from this point of reference, price level around 17,350 something, has seemingly been a little bit corrective in nature. For instance, we can just count this as a structure up as an A, B, and C, or even better, it can be counted as a W up, X down, and Y up. So, long story short, is this structure looks corrective if you go on the shorter time frame, right? Actually, we can just head over there and just see. This can be counted as a W, X, Y, right? So now this being counted as possible as a WXY does not mean there are not bullish implications or bullish methods which we can check this particular movement as. We can always look at it as a nested one-to-one formation. But why I'm pointing out this corrective structure is that the bears may not have been gone completely out of the market, or long story short, we still need to see some sort of confirmation, right? So specifically, if we look at this, we can see that even this, it is not very important, but it's definitely something to keep in mind. Even this trend line is getting tested here, right? Was breached for a few moments, and then the price went back again in it, right? So long story short, if we want to trade longs, we do not have the confirmation for it yet, right? Personally, I might be interested above 18,040 level, or actually 36 level. Above this level, I might be interested in taking some shorts, but sorry, some longs, but those will be intraday longs and not swing longs on this counter, right? Swing perspective wise, we still need to see a proper movement. Actually, the confirmation will come of 18,200, but trading wise, I think I will look to activate some long trades above 18,130, right? So wait and watch, right? Both possibilities exist, bullish and bearish. Important levels I just discussed, and immediate trade, I think immediately we just wait and watch for those levels to be taken out. Let me know, guys, if there's any particular doubt on this counter before we head over to our last chart of Bitcoin. Or by the way, if you were able to catch all the points made here on this Nifty 50 chart, then do let me know in the comments section as well by typing in understood or clear or something. Thank you, Philippe. Thank you, Jill, for the confirmation. Let's head over and check our last chart. Surya Thakur is asking, can you tell me about EURUSD? EURUSD is the first chart we have discussed. Just check the webinar at 8 minute. So around 8 minute we started discussing. 8th minute we started discussing Euro USD chart. So let's see, where is BTC? Okay, so BTC has performed again. This takes our tally of the trades that worked in the last 38 webinars to 43. So guys, 3 trades discussed in the last webinar have worked out. Euro USD worked out, Nifty worked out, and Bitcoin. So again, I'm just talking about the bigger moves, not talking about the small moves which I point out now and then. So let's have a quick look at what was it that we were discussing on Euro USD, sorry, BTC, which worked out. So first of all, if you are following me from the past webinars, you already know we were able to capture this leg from around 17,000 to 21,600 till this white resistance zone. We were able to catch this whole. Literally, we were able to forecast it in live market, right? Then, since the market was over here, since around the level of 23,700, we had this hypothesis that it can go down first and then up, down for the wave 4 and then up. So we were able to capture some part of this leg down as well, and then this move up we discussed in the last webinar itself. So you can just check the recording again. I do not want to pull out the recording again and again for every single thing we discuss. You can see these arrows, and we also marked the target level. The target was, oh, it actually reversed from the exact level we marked the thing. So the target was supposed to be this 25349. It has literally stopped near 25349. Let's see. It has stopped around 25280. Just a small tiny bit below it. So it has not only just gone in the direction we discussed, it has actually it has actually touched the almost touched the exact target we discussed. So what's happening right now? Thank you for joining us, Philippe. I'll see you next time then. So what's happening right now is that either this wave 5 is still continuing or it may have completed, right? And the reason I cannot say that with complete certainty that if it's complete is because this particular counter of Bitcoin has the tendency to give corrections which are wilder or bigger in movement compared to normal markets. It is also worth pointing out that we have to use the logarithmic chart on this counter because of the wild movements it makes, or basically because of the volatility, right? So it is still possible that this is just the 4, and this is the 1 up, 2 down, and then 3 up, and this is still continuing sideways for the 4, and then there will be a 5th up, right? So if that is not the case, then we will only be able to confirm it at a clear break of this trend line, right? So long story short is, if you were able to capture this long trade, keep trailing, right? And personally, the trail I think should be about 23,000, and somewhere between 23,000 and 23,100 you can move the trail, right? Because if it goes lower than that, then your profits will soon get wiped out. So it's better to move it somewhere there. Of course, based on your entry and price management, you will have a possibly different level. And as far as the trading goes, it's better we leave it for now and discuss it in the Monday's webinar, because as I said, we already captured the long trade here. So it's just trail your profits and secure them, book partial and trade management things that you have to do, not look for new opportunities on this counter. So with that, I would say that we have discussed all the charts we generally came to discuss, and And if you have any doubts, please do let me know in the comment section. Otherwise, we can say that this webinar is now complete. And I would like to request you guys to kindly hit the like button on the respective platforms you are on, and also share the content of this webinar, the link of the YouTube video or the link on my website, because all these webinars are later published or documented on my website, just like this last one. So you can also share the website link. So whatever is convenient to you guys, please do share it in the Slack, Discord, WhatsApp, or whatever trading groups you may have, or just share them with your friends or colleague. Lastly, and more importantly, I am also on Twitter. So if you are on Twitter, do make sure you hit the like or retweet button, something like that, so that there is some activity over there and we can get more reach. And my handle there is called 50 underscore EYES. Right. So that was it for this webinar, guys. Jill is saying great, thanks. You're very welcome, Jill. And I'll see you guys in the next one on Monday.